Mr. Sidney Thwaites, Mr. Nugent, I was told from St. Mary, Mr. Keith Collister, and Mr. Chase Brown. We have with us this morning Governor Richard Biles, Senior Deputy Governor Dr. Wayne Robinson, Robert Stennett, Mrs. Natalie Haynes, Dr. G.D. Lewis, and Celeste McCullough. Our agenda is as per usual. Governor Biles will speak regarding the bank's latest monetary policy decision in the context of the bank's outlook for inflation and the overall economy against the background of the economy's performance for the last quarter, after which the floor will be open to allow for the question and answer session. Governor, over to you.
Thank you, Melanie. Good morning, ladies and gentlemen, and welcome to our quarterly monetary policy report press conference. My statement today is set against the backdrop of a rapidly changing policy landscape in the United States and the global economy, which has implications for Jamaica's economic prospects. Since our last press conference in February 2025, the U.S. government has been resetting trade relationships with its trading partners and has announced several economic policy changes, particularly relating to tariffs, immigration, remittances, and fiscal operations. These policy announcements, negotiations, and subsequent policy amendments have fueled uncertainty in the world economy and have, one, resulted in tariff retaliations by the major trading partners of the U.S., particularly China. Two, generated higher volatility in equity and bond markets in the U.S. and around the world. Three, precipitated a fall in commodity prices. And four, stimulated a fall in consumer confidence in the U.S. Naturally, there has been much uncertainty about the impact of these policies on the U.S. economy, but more so on the global economy, including Jamaica. Bilateral negotiations between the U.S. administration and other countries surrounding tariffs, trade, and investment policies are ongoing, and the outcomes of these negotiations are unknown at present. It appears, however, that the march of globalization has generally paused, and when this resetting of trading relations has concluded, higher tariffs are likely to be a part of the new global trading arrangement. Importantly, it appears at this stage that the final package of bilateral tariffs to be imposed on trading partners by the U.S. will be materially lower than those announced on the 2nd of April 2025. Following careful consideration of the implications of these developments, recent economic trends, and the outlook for the Jamaican economy, the MPC unanimously agreed to, one, reduce the policy rate, that is, the rate offered to deposit-taking institutions on overnight placements with Bank of Jamaica by 25 basis points from 6% to 5.75% per annum, effective the 21st of May 2025. And two, to preserve relative stability in the foreign exchange market. Let me explain the rationale for this decision in the context of the new global environment. First, the incoming economic data on Jamaica continues to point to a stable domestic economy with inflation remaining in the 4 to 6% target range. On the 15th of May, the Statistical Institute of Jamaica reported that headline inflation at April 2025 was 5.3%, in line with the outturn for April 2024. Headline inflation has therefore continued to remain within the Bank of Jamaica's target. Also, core or underlying inflation remains low. Core inflation, which excludes the prices of agricultural food products and fuel from the Consumer Price Index, was 4.4% at April 2025, remaining below 6% since July of 2023. The stable, relatively low inflation outturn primarily reflects the end of the impact of previous price increases for regulated items such as bus and taxi fares, and no new such increases, which offsets higher food inflation. Moreover, the exchange rate, imported inflation, and private sector's expectations of future inflation have been fairly stable. Expectations about exchange rate depreciation have remained relatively stable. At the 14th of May 2025, the exchange rate had depreciated on a year-over-year basis by 1.9%. There was a mild uptick in the pace of depreciation between the end of April and early May, in the context of a slight increase in demand and a build-up of foreign exchange positions by authorized dealers. In response, the bank augmented flows in the market. Cumulatively, BOJ has sold $1.1 billion by its B-Fixit facility over the 12 months to the end of April 2025, compared to $983 million over the 12-month period to the end of April 2024. However, it is important to note that the bank net purchased approximately $1.1 billion over the 12-month period to April 2025. Therefore, as at the 14th of May, Jamaica's gross international reserves remain healthy, amounting to $5.9 billion, or 135% of the measure considered to be adequate. There has also been a moderation in imported inflation in the March 2025 quarter relative to the December 2024 quarter. Specifically, oil prices declined during the quarter relative to the previous year. The bank estimates that the domestic economy grew in a range of 0 to 1% for the March 2025 quarter, which translates into an estimated contraction of -1% or 0.5% for the financial year 24-25. Finally, while employment levels remain high, anecdotal data suggests that wage pressures are moderating. In assessing the near-term outlook, the Monetary Policy Committee contemplated the implications for the Jamaican economy of the policies that have been implemented by the U.S. administration to date, and in so doing, looked at several scenarios. From this exercise, the bank's view is that the first round impact of the increase in U.S. tariffs on prices in Jamaica will not be significant. For the U.S., the policies are likely to temporarily increase inflation. We expect that the U.S. Federal Reserve, the Fed, will respond appropriately, and we also anticipate a slowing of the pace of U.S. economic growth. We note that the Fed maintained its interest rate target in the range of 4.25% to 4.5% in the May 25 meeting, and is likely to continue to maintain rates for an extended period of time in 2025. While some consumer prices in Jamaica may rise due to the higher inflation in the US, the impact of imported inflation on overall domestic price level increases will be largely offset by fall in world oil prices. Given the available information, the bank therefore projects a moderate impact of the US policy changes on prices in Jamaica. In this context, the outlook is for inflation to remain within the bank's target range of 4 to 6% over the next 2 years, notwithstanding some upside risk. This outlook assumes stable inflation expectations, a moderate decline in crude oil prices, continued stability in the exchange rate, and moderate domestic demand. The US policy changes may have some impact on Jamaica's GDP growth and the from the baseline tariff imposed on Jamaica by the US, and this may augur well for growth in those industries. The economy is therefore projected to grow moderately over the near term. Against this background, and factoring domestic demand conditions for financial year 25-26, real GDP is projected to recover in a range of 1% to 3%, largely reflecting normalization in the mining, tourism, and construction sectors. In this context, employment levels are projected to remain high, even as anecdotal data suggests that wage pressures are moderating. The current account of Jamaica's balance of payments is projected to remain in surplus over the near term, and the international reserves are projected to remain healthy. The bank projects that gross reserves will improve further over the medium term, remaining above the assessing reserve adequacy ARA level of 100%. Looking at the risks to the inflation forecasts are, however, skewed to the upside, which means that inflation could be higher than projected. Higher inflation could stem from a sharper than anticipated increase in a tariff faced by trading partners of the US. In addition, domestic inflation could be higher than projected if there is a further escalation in geopolitical tensions, which could negatively impact international supply chains. Low inflation could, however, result from lower than projected international commodity prices, as well as weaker demand conditions. The MPC will therefore continue to carefully monitor domestic inflation expectations and any upward pressure on prices caused by the evolving tariff landscape. The bank is prepared to adjust the stance of monetary policy if its outlook does not materialize and there is an upward deviation of inflation from the bank's target range. Importantly, the bank is well positioned to support stability in the foreign exchange market should the effects of the policy changes abroad affect foreign exchange flows by more than currently anticipated. To conclude, ladies and gentlemen, Bank of Jamaica remains committed to achieving its primary mandate of maintaining inflation at 4 to 6% and will deploy the tools necessary to preserve price and foreign exchange stability. The external environment carries much uncertainty, but the domestic macroeconomic outlook remains stable in the bank's view. Thank you, and I'll now take questions.
Morning, Governor. If I may open the button. Congratulations on the latest round of interest rate cut. But question though, Governor, will you continue to allow the status quo to continue in the sense that you're allowing the commercial banking sector at its leisure to reduce or the inactive movement in terms of the rate transmission? And on an editorial note, In the recent budget debate presentation, the issue of interest rate transmission featured on not just one, not just two, but all four presentations in the budget debate. Question one. A rider to that, while the BOJ is independent, have you gotten any inquiries from whether Hero Circle or Jamaica House regarding the issue of the transmission rate, interest rate reduction? And I should also note that I read an article in one of the newspapers claiming that the transmission system in the banking sector is broken. Could you comment on those three matters, Governor?
Thank you. Yes, we are not satisfied with the transmission system, and we've said this at many of our meetings and on other occasions also. And we are working to have that fixed, but it takes a little while to get what needs to be done to make that transmission system more responsive. But you can be assured that we are working on it. In the meanwhile, we will certainly be expressing to the banks that this rate cut, which is coming even before the Fed has given consideration to a cut, that we see this as a signal, a powerful signal to them that we want rates to chug down, to come down. Many loans, and I've said this before, but let me say it again. Many loans from the commercial banks were fixed rate loans. And to that extent, those customers did not feel an increase in the price of loans. That's a fact. We have the data on that. Some clients who borrowed after we started to increase interest rates did get an increase in their rates because I guess the bank's eyes wide open saw that the central bank was on an upward movement of interest rates, and they did not put on any more fixed rates, and they began to adjust new rates to a higher level. Those customers, I think, are eligible for review of their rates because we have cut rates now cumulatively 1.25% from the high of 7%. So we are going to be meeting with the commercial banks, and I'm saying to the public that we think the conditions are there for the commercial banks to look at those loans that experience an increase or that were put on at a higher rate than their other loans. Look at those and see whether you cannot give some relief to your customers. Let me say, they are your customers. I'm speaking to the commercial banks. Can you give them some relief? The Bank of Jamaica has cut 1.25%. You should be in a position to make a cut also. No, we have not got any, I think if you mean any pressure from, yeah. Yeah, so, you know, I must say, ever since the central bank was made into an independent central bank in April 2021, we have had a very good relationship with the Minister of Finance and with the Prime Minister himself. Nobody has really trespassed on our authority over monetary policy. So whether it was the previous Minister of Finance or this current minister, they have been truly respectful of the independence of the central bank. Was there a third question, or did I answer them all?
I must admit that I'm not really satisfied because the very answer I got were the very answers I got the last time round. I think what the public and the private sector are demanding is a bit more activeness from the BOJ in ensuring that rates do go down, and they should.
Yes, I understand that. And for us to do that, we need to have a thing called legislative power We need to have that right. However, we have a market economy. We opted to accept a market economy. Same way I can't tell a supermarket about their prices, I cannot tell the banks about their prices. This is a free market. What we can do is give them the signal and talk to them and encourage them. And that is what we're doing, as well as doing work to make customers be able to port their accounts from one bank to another bank, making it easier for KYC data to be available to all customers and all banks. That takes a little time, but we are working on it.
Good morning, Governor. I've got to congratulate you on this one, because it would have been easy to wear both braces and belts and be really conservative. But you've made the move. But should it be a case that probably you said the legislative side, I agree with that, and also on the fiscal and on the banking side. Now, isn't it incumbent on them now to make a move for the whole economy to adjust, given the global environment? Jamie Dimon said, I think, day before yesterday, that we're going to be going into a hurricane, into a storm here, and a lot of people are underestimating these things. I saw 2 days ago that Subaru increased their prices. A lot of automakers are going to increase their prices. And he's saying that this thing is yet to really manifest and show itself. But you've made the move. How about other players making the move?
Yes, that's true. And can I say, when you look on the total financial market, the commercial banks have approximately half, and the non-banks have the other half. The non-banks have been very responsive to rates going up and rates coming down. And I think what the banking community needs to look out for is that the non-bank community starts to lend to their customers around them. In other words, if I can't get a rate reduction from my commercial bank and my rates are, in my opinion, high, am I open to a security dealer doing a bond on my behalf and paying out the commercial bank? So that's a risk, I think, that they run if they are stubborn in not being sensitive to rates coming down.
Okay, I remember the third question now. It was asking you to comment on an article which says that the interest rate transmission system in the Jamaica's banking sector is broken.
Yes, and I think I answered that. It's not broken, but it is not as efficient as we'd like it to be. Right? When we were going up, the commercial banks were very slow, and we had to jawbone them to get the rates to go up. Now that we're coming down, they are very slow to make that adjustment, and we're going to be jawboning them to bring it down. We don't want that to be the case going forward, and so we are doing what we said, laying the foundation in the medium term to get that system to be more efficient.
Good morning, Governor.
Morning.
Thank you for your presentation. Just following on the discussion regarding the interest rates. Chamber of Commerce, St. Mary. It seems to me that one of the critical issues has to do with the lack of competition within the banking sector. Certainly, the bank seems to report record profits quarter over quarter, and therefore it may be that you need to look at attracting other players in the banking sector. As you mentioned correctly, it's a free market situation, and therefore competitiveness is one of the critical force that needs to play out in this kind of setting to help address some of the issues that are presented by the stickiness of interest rates in the commercial banking sector. So the question becomes, what are your views regarding the opportunities for other players to enter the banking sector, the commercial banking sector?
Yeah, that's an interesting question, and I think that question would be appropriate in any other market. But here's the situation in our market. We have 11 DTIs. And in the last, I would say, 15 years, we have added maybe 5 to make it 11. So the central bank and the country has let in several new financial institutions, banks, commercial banks. But that has not shifted the competitiveness by any significant amount. 60% of all deposits are with 2 banks. And that has not changed. And in the banking business, he who controls the deposits controls the loans. If you don't have the deposits, you can't make the loans. If your deposits are more expensive than somebody else's, you can't be competitive in how you lend. So it's not a matter of letting in more institutions. It's a matter of giving consumers the freedom to move from one institution to another. And one of the hurdles in doing that is a KYC issue. And the way in which we are going to address that is to have a centralized digital database of KYC information. That information will belong to each individual bank customer. Don't belong to the bank, it belongs to the customer. And the customer can take that and walk to any bank that they want. So if I'm at Bank A and I don't like their deposit rate, I can take it and walk to Bank C and open an account without a lot of trouble. In that way, create a lot more fluidity of customers from one bank to another bank. Similarly with loans, if I am not happy with the rate I'm getting or the conditions of the loan, I can port my business to another bank more efficiently. As I said, it takes a little doing to get done. This is data that is very personal to you, your finances and all of that stuff, where you live. And so we have to be careful about how that data is accessed, stored, and moved from one place to another. And you know, this whole cybersecurity risk that is, very prevalent. So we have to be careful about how we build that system. It's going to take us a year or maybe a little bit more, but that is coming.
Governor, I'd want to ascertain your opinion, particularly as a top central banker. In the US, we're seeing Jerome Powell come under increasing pressure from the President of the United States. He literally told him, look, you've got to reduce the rates or your job's on the line. What are your thoughts on that?
Well, the chairman has done what he considers to be right, which is always the correct thing to do. An independent central bank is just that. It's an institution jammed packed with technical expertise. That's what we have here, in the Bank of Jamaica and certainly at the Fed. The best technical expertise resides in there. So it's not a question of Jerome Powell and his decision, nor Richard Biles and my decision. It is a question of the data that we are gathering better than anybody else, and the people and experts who are assessing that data and drawing conclusions, and they are the best that are available. So I think from that perspective, it is always the correct thing to respect the independence of the central banks.
Good morning, Governor. Conrad Wright, representing the Spanish Town Chamber of Commerce here.
Welcome.
Thank you, sir. In your previous rollback of rates, I recall the president of the Bankers Association, Mrs. Audrey Tongwell Henry, articulating a point around factors that impacted the rolling back of the rates. Some of those factors included the high taxation on banks and the asset tax levied on banks that are some of the factors that are impacting the slower rolling back of the interest rates. Is the Bank of Jamaica in a position to lobby on behalf of the banks to central government to address some of those issues that were articulated by the President of the Bankers Association?
Excellent question. So, formally speaking, the central bank has authority for monetary issues, right? That has to do with interest rates, foreign exchange, regulation of the financial institutions. And the Minister of Finance has responsibility for fiscal matters. The taxes are a fiscal matter. To the extent that those taxes are having an implication for interest rates, we will engage with the Minister of Finance because if it is a stumbling block to rates coming down, and we believe rates should come down, we will make representation to the ministry. But we don't have insight into the depth and implications of the fiscal accounts, not as well as the ministry does. So if we think it is something that is pressing and needs to be dealt with, we will have a discussion with them about it. But ultimately, it's their decision to make. Good question.
We have a question online from Dashan Hendricks.
All right.
Or from Keith.
Keith. Says go ahead.
Okay, Dashan, would you like to go
Could I
ahead?
go ahead? All right, Governor, you're doing such a wonderful job of navigating the central bank through its first stage of independence. But your contract comes up for expiration next year, August. And in addition to that, you turn 75 next year. Has the government approached you as to say continue on a little longer after next year? That's one. And two, if the government has approached you now, would you accept it? Would you look to go beyond the end of your contract? And looking back over the last 6 years, what are your greatest achievements? What kept you up at night? And also, have you looked into the bank to say, if I'm not going to go on beyond next year, have you seen a successor, or would you recommend one to the government? That's one question. I'll come back for a second one after you answer that.
Boy, that one question alone. First of all, you out me about 75 next year. I don't understand. You out me. I forgot to take that up with you on another occasion. But it's been my privilege to lead Bank of Jamaica for the last 6 years or so. And I am 75 next year. So let's leave that whole question at that place. What else you had to ask me? Sorry?
Would you continue beyond next year? What are your greatest achievements so far? What kept you up at night? And if you see a successor?
We're going to leave some of those for another occasion. But what keeps me up at night? Look, Jamaica is a small, open economy, very vulnerable. And as the winds blow, so too we catch cold, and, that always is something to be concerned about. You never see the next thing that is coming around the corner, and it hits hard. So the fact that we don't have a big domestic economy that can sustain and drive itself with internal growth is a concern. We're a very open economy, dependent on tourism, dependent on imports, all of which have serious implications for us, and we don't have control over them. So that keeps me up at night, and I think it would keep up any administrator of the country at night.
All right, the second sorry, I'll come back then. Should I go ahead with the second question?
Go ahead.
All right,
Yes.
this is more for Dr. Lewis. On the ABM performance, looking at the February 2025 ABM performance report. We have seen great improvement in terms of ABM operationality in the country, exceeding the 90% set by the Bank of Jamaica. But however, we are still seeing on the uptime segment, the banks performing below the 95% standard, especially two banks in particular, the Bank of Nova Scotia on their uptime in rural areas and the Jamaica National Bank in the Kingston metropolitan area. What specific corrective actions has the Bank of Jamaica demanded from these banks, and what are the deadlines for compliance? And when does the BOJ expect all banks to meet the 95% uptime standard? And are there any consequences beyond supervisor concerns that banks will face for non-compliance?
Objective of issuing the standard of sound practice for ABM performance. Yes, we have seen more ABMs operational across the banking system. I think there are currently over 900 ABMs, and the operational rate in terms of accessibility to members of the public is in excess of 98%, which is very good. Yet the banks still are struggling with the uptime. So they're not at the 95% level. They're somewhere in the low 90s. And the two banks that you mentioned haven't been at that amount of the 95% or in excess. So that's something that we continue to dialogue with them. One of them has a portfolio of ABMs that are past their best life. So they are prone to breakdown more often than is warranted or would be desirable. So we have spoken to them about that. They are deploying, and that's, I can say, that's Jamaica National. They are deploying a whole fleet of ABMs over the next 6 months. And I think you would have seen a number of instances where they have published that some of their sites are down because they're replacing those ABMs which are near end of life. So we continue to monitor that. We're expecting that when that new set of ABMs are deployed across their network, the downtime will be reduced and they'll be able to bring themselves into compliance with the 95%. With Scotia, the challenges have been more in relation to the machines being able to receive deposits. Sometimes there's a high rejection rate of the notes, and that's something that their technical team is working on to allow them to hit that 95% uptime requirement. So my response to you is that we look at the figures, we get the figures before they're published, we vet them with the entities, we have discussions around their plans, and in many cases the solution to these are not short-term patches. They have to actually redeploy new machines. And part of the challenge they have had is that many of the machines that they have continue to be vandalized. And so even as they're bringing new machines to the market, some of the ones that they already have in operation are being subject to vandalism, and that then pushes them back sort of off that slippery slope. I see a lot of mouthing, so we continue to journey with them in terms of that secular improvement in their service delivery.
I guess it's me now. For the governor. Keith Collister, representing the Jamaica Chamber of Commerce and the Private Sector Organization of Jamaica today. can I ask for a little bit more detail on what you describe as the first round impact of the increase in US tariffs on prices in Jamaica, and why you don't think that will be significant? And in particular, in the light of the fact that you now are arguing that the inflation will be within target over the next 2 years, which I think is a relatively recent shift. I'll come back.
All right, thank you for that question. Very good question. Quite involved set of issues, and I'll just try to explore the contours about why the bank thinks that the first round impact of the tariffs on Jamaica will not be significant. We can look at it from the perspective of the impact on inflation, and we can look at it from the perspective of the impact on GDP growth and the balance of payments. We won't give an exact number, but just to aid the thought process, what we have done is we have estimated how much to date tariffs as announced by the US has increased. On the basis of data from the WTO, we assumed or we think or we have numbers that prior to the announcement, tariffs in the US facing the rest of the world was in the region of 1.5%, very low. In fact, the US was considered world leader in terms of the level of tariffs that faces their trading partners in the progress towards globalization. We all know about the tariff packages that have been announced to date, but we are clear that there is a baseline set of tariffs ranging around 10%. We also know that there are some US, Mexico, Canada trade agreements for which assets for which tariffs are zero. And we are aware that even in the announcements, there are some critical imports into the US that are zero rated. Cell phones, computers, rare earth, etc. have been exempt from the baseline tariffs that have been announced by the administration. The issue with the issue with China is a complex and evolving one, and we basically just take whatever is announced as the effective tariff rate. The US and China have been going at it for some time, and we roll whatever the president announces in relation to the tariff facing China into this package. All considered, to date, the effective tariff facing the rest of the world imposed by the US is less than 10%. So then we ask the next question: what is the impact of the increase from 1.5% to less than 10% on inflation in the US? And while I will not give the details of our internal models, how you think about it is how important are imports for the US from the rest of the world in relation to their consumption basket. The US is almost an autarky. It consumes most of what it produces, and imports are a fairly small proportion. So if you use a thought experiment to say that the US imports 10% of its consumption, then you can understand why higher prices on 10% of what the consumer imports, going up by 8 percentage points, will translate into a fairly small impact on US inflation. Roughly less than 1% or closer to 0.8 percentage points in impact on their inflation over a very short period. How does Jamaica come into this? Well, Jamaica buys goods and services from the US, right? So if you go on Amazon, you buy a TV, you're going to import that inflation into Jamaica. And then the obvious question is, well, how much of that 0.8% is imported into Jamaica? And you get an idea of what the impact on Jamaica is. We don't import everything from the US. We import from China and a range of other countries, and therefore you have to prorate that 0.8% impact on the US inflation in terms of what it comes down to for Jamaica. So the bottom line is that when you consider everything, the impact on us will be small in the context of expectations in Jamaica not resetting, and if our domestic monetary situation facilitates second round effects. I should go back, by the way, to say that if the US Federal Reserves accommodates second round effects on inflation, then their inflation episode will be higher than what I've just said. We are confident that the Fed is independent and will react appropriately. And certainly for BOJ's perspective, we are going to watch carefully how expectations are evolving and how those transmissions to Jamaica are also coming through. On growth, that's a much more complex issue. We are aware that consumer confidence in the US have taken a hit over the past 5 or so readings since the policies have been announced. Part of that decline in confidence has been due to the fact that wealth, as measured by movements in the stock exchange, have gone down. But we have subsequently seen where stock market indices have come back up. So consumers are feeling a little better about their 401k, and therefore they should be reassured that they are not going to be severely impaired in retirement. But nonetheless, consumer confidence is an important element of the decision by the consumer in the US to go to a restaurant, to travel, and so on and so forth. So our view is that as the wind blows, tourism in Jamaica can be affected by the vicissitudes of the uncertainty that is going through the US now. But we are also aware that there is travel diversion. So while the American tourists may opt not to travel, other travelers may opt to come to Jamaica in the context of the relationships that are evolving in the US. So you may very well have Canadians who are opting not to go to the US to come to Jamaica. You may have Europeans who are opting not to go to the US to come to Jamaica. So the picture is not clear. Second thing I want to say about tourism is that the tourism industry has been performing fairly spectacularly over the past 2 or 3 years. And some of that performance has been moderating. So the declines that we've seen over the past, I would say, year has been related to bad press, bad weather, and therefore the tourism industry is coming to some sort of normalization, a base from which we expect tourism to start picking up going forward. But the spanner in the engine is that the tourism industry will now be affected by this raft of adverse headwinds that may very well retard the growth. But we still think that tourism is going to grow, notwithstanding this issue about consumer confidence in the US. So it's not clear, but we've shaved our forecast very marginally for tourism, but it will still grow. On the upside, however, we're aware that Jamaica's bauxite and mining industry has an exemption for exporting into the US, and we're aware that there are potentials for the contracts that allow Jamaica to supply bauxite to Gramercy may allow us to export more bauxite into the US, and therefore there is a possibility that we can grow from that perspective. So what that leaves us with in terms of the growth is the impact on Jamaica's exports of the agriculture and the mining sector and the manufacturing sector. I mean, there was an article in today's paper that articulates very well the challenges that the exporters are facing, and they can tell you better than us, but it's still a wait-and-see issue as to whether the 10% tariff will be absorbed by the domestic manufacturing sector and agricultural sector, or whether they will have to pass it on to the US consumer and it may affect demand in the US. The bottom line is that when you add it all up, you're going to find that growth is still a strong prospect in the Jamaican economy. By the way, going back to inflation, I forgot to note that oil prices have come down, as the governor said, and even with the impact on some consumer prices in Jamaica, lower oil prices are going to support low inflation. Hence, we have with all the uncertainties, we have a fairly benign set of circumstances, and we still believe that there will be growth and inflation will continue to be low. So that's a question I'll take, Governor, with. That was too long. I apologize. I will not do it again.
That was quite comprehensive, so you anticipated a couple of my follow-ups, but I have one more, well, at least one more. The main question, and this is, I hope, is for the Governor, is the recent cut likely to be part of an easing cycle, as you are now signaling that you are willing to deviate from relying on US interest rates as your benchmark? I know you always say that, but that you're independent of what the US does, but obviously you also say at the same time that you follow closely US monetary policy for capital flow reasons. So that would be my next question.
Yeah. So we have to keep our eye on more than one thing. The fact is that the situation domestically is at a place where we feel that all the signs are pointing to lower interest rates. Inflation is within target, has been for a long time. Foreign exchange reserves have been building and strong. The exchange rate has been pretty stable. Wage increases have moderated. All these are signs that you are in an economy where you can ease rates. So the data that we are looking at right now says all the lights are green. Yes, we have to keep an eye on the Fed rates. Right? And everybody knows why, because this is a global financial world, and what rates exist here are competing with rates that exist just north or even in Tokyo, such as the financial world today. So whilst we are looking at data about our economy and seeing the green lights, we do have an eye on the Fed and what they are doing. So every time we meet going forward, we're going to be looking at the domestic data. Are all of those signals still green? Have some of them turned amber? What does that mean? As well as we're going to be looking on what is happening in that mammoth economy just north of us and with their interest rates. Have to handle both one time.
And a follow-up to that is, you talked about you expect the range to be in the lower half for inflation, which I'm interpreting to mean 4 to 5%, as part of your 4 to 6% target. And does that mean that you want a real interest rate of 0 or near 0 might be appropriate in an economy which to me looks like it probably is growing at the lower end of your 1 to 3% range or forecast going forward? I might be wrong on that, but that's just looking at the different sectors. It doesn't seem as though you're likely to get to your 3%. I know it's a range. So if that is the case, if we're more closer to 1 than 3 on the GDP forecast, is a real rate of interest of closer to 4 to 5 appropriate? I guess this is a long way of asking you what your interest rate target is.
You admitted it yourself, so I don't have to explain it. Yes, that's a long way of asking. And the fact is, Keith, every month and every quarter, the data shifts a bit. And even if today we have a perspective of what rates are appropriate in the future, next month that may change. That's why we always say we rely on the data to drive our decisions right at the moment. So today we have an outlook that is pretty good. 2 years going forward within the 4 to 6, maybe just shy of the 5 or around the 5, not over the 5. But next month, we could see an amber light blinking that says, maybe remittances are looking a little weak, whatever. At that point, we'll make a decision as to what our long-run outlook is.
So to summarize, you're data dependent.
Yes, data dependent.
Okay, maybe I can, Al, you want to go ahead?
Okay, I'm Barbara Lindo from South St. Catherine's Chamber of Commerce. And my question is...
I'm so happy that we have visitors today. Welcome.
Thank you. My question is around the remittance. So if we are seeing weaker remittance, is there something that can be done to maybe offer a better exchange rate on remittance to kind of encourage the increase in remittance? Maybe if there's an issue on the US side, like I grew up in Canada, so maybe that would encourage more remittances from other countries if the receivers can get a better exchange rate. We will see the Bank of Jamaica that will have a specific rate, but then from the banks, the difference is so wide. Is there anything that can be done to probably close that a little bit?
Yes, excellent question. So remittances have a series of charges. Somebody put in $100 in Canada or the United States. Whoever is the accepting agent there takes a fee. There's a transmission cost, and there's a fee to the person here, the institution here that is handling that fund, and then the exchange rate to the actual beneficiary. So there's a chain, and I would hope that somewhere along that chain, some or all of that would be absorbed so that the recipient here doesn't feel the full brunt of that effect. But remember, this is not a decision that has been made yet, that there is going to be a charge on remittances. So we still have a hope that it doesn't happen. But the point is that if it does happen, there are agents along the way that can do as you say, give a little ease so that they take a little less margin and allow the industry to continue to flourish. Because in the long run, it is to the benefit of not just the beneficiaries, but the whole banking financial industry that business continues.
What are the current concerns regarding the adverse weather shocks for this year?
The what shock?
And also, how is the redemption?
Sorry, could you repeat the first part?
What are the current concerns regarding the adverse weather shocks for this year, as well as how is the redemption of the old notes expected to impact or support the economy during this period?
So, we never know with the weather. The weather is even more unpredictable than world events. So we're always hoping that we don't get a big hit. Some years we're lucky, some years we're not. So we can't factor in some of those things in our projections. But, of course, if we did have a weather event, it would upend a lot of our forecasts for the years. Yes. And the last question was what?
How is the redemption of the old notes expected to impact or support the economy?
There's no impact, really. We are asking for the old notes to come in by the 1st of July.
Well, they can come into BOJ after.
No, yes. Right. So we want everybody in the public to swap out their old notes for new notes by the 1st of July, and you can do that in all the commercial banks. After that, you can come to the Bank of Jamaica and swap them out. We are talking to the commercial banks to see whether they would allow for that swap out to continue even after July 1. But, you know, a lot of people have notes put down, they don't even remember them. Everybody should just stop for a moment and say, wait, didn't I have some stashed here, stashed there? Bring them in, change them out. There's no cost to you whatsoever. That's it.
Sorry about that. Governor, I note that you sold 1.1 billion via your BFEC, and it's an uptick on the previous year. Does that concern you, given what we're likely to go into over the next quarter? And if we go past that kind of 160 barrier, the impact, just what people would make of that. Does that concern you? That's one. And secondly, what do you make of the downgrade of the USA?
Well, let's deal with our situation. You know, the foreign exchange market has seasons. So if we have this press conference in May, it will show one picture, and if we have it again in July, a different one, and if we have it in December, another. So the market has different seasons. The difference between what we sold into the market this year and the year before is just like 100 and some million, not a big amount. At the same time, the market is growing. So every year, the market for foreign exchange grows somewhat. So I don't think I am unduly worried about the selling 100 million more this year than last year. The 160, yes. Every 150, 160, 140 mark always has a psychological impact. It's like people don't think there's any difference between 151 and 159. You know, it's the same 150 something. But once it hits 160, my God, you know, even though the margin, the change is really quite marginal. So we are aware that there is this psychological effect. But we don't control the market. Really, every day the market trades, and it trades at whatever it wants. All we do is, whenever we see the market being particularly volatile in an irrational way, then we'll go in and we'll sell. And oftentimes that has to do with kind of pent-up demand. Maybe an oil company has to pay for oil, and that can be 2-3 million, like JPS. Right? Or maybe it is the DTIs have built up balances that they need to pay off. So that's when we enter the market, just to smooth it out. Sorry? Oh, yeah. Well, this is just the third time that the US has been downgraded. One downgrade came in 2008, 9, somewhere around 9, 10, 11. Another one came 2023, and then this one. So what it is saying is that all the rating agencies are now aligned that the big problem the United States faces is a fiscal deficit. So we have spent a lot of time and angst in looking at tariffs, but the United States faces a big issue when it comes on to their fiscal deficit. And that can have implications for world trade and for economies that deal with the United States. So that is something that we are watching very carefully. And that deficit is what's driving the rating agencies to downgrade.
Okay, somebody has a follow-up at the back.
Thank you. Governor, on the matter of the banknotes, are there plans afoot to again change the quality of the paper that our current Parliament notes are printed on? And if so, what's the expected impact on the bank's ABM network? Because we know that the last time we changed, it created a hell of a problem with the machines. Is there going to be another change? And if so, what is the expected impact?
No, we don't have any plans for another change. But Natalie, you go ahead and speak to it.
Good morning. No, there are no plans to change the substrate of the banknotes in the medium or even long term. Polymer is what it is. Is that your question on the substrate, or is there something else on banknotes? I think you're trying.
Okay, so let me just get a little bit more granular.
Yes.
The $5,000 notes tend to give the machines a lot of problems, all right? And there's word out that the quality of that paper might be changed. Still polymer, but the quality of the note itself, I don't know if it is factual, if that is the case.
No, that's not true. There's no such thing.
Okay.
And whatever, as the governor had alluded to, from GDA, when the machines reject the notes, it is an issue with the machine, and the banks are working to correct that. All notes are on the same substrate and of the same quality.
All right, we have a question online from David Rose. Has BOJ made changes re liquidity requirements to affect the liquidity coverage ratio for DTIs? He says he has heard that no date has been set, but a major change is taking place based on operational risk.
I'm going to ask Dr. Lewis to address that.
All right. Well, we are currently in consultation with the banking sector around an amendment to our standard of sound practice for the liquidity coverage ratio. We would have implemented that particular standard maybe about 2 to 3 years ago. Banks have been in compliance with it. Basically, what it means is that banks have to compute on a monthly basis how much outflows they have, meaning how much cash they need to pay out, and they need to ensure that at any given point in the month, they have 100% of that in high quality liquid assets. What does that mean? That means that members of the public can be assured that anytime they go into a bank, that particular bank will have the cash to meet their withdrawal demand, which is essentially the contract that they sign with the bank. If I deposit $100 today and I come in tomorrow, I should be able to withdraw my $100, particularly if it is just on a basic saving account. If it's on a term deposit and I said I'll come back in 30 days, then I can come back in 30 days and withdraw the funds. So that's what the LCR ratio is really about. It's an international standard. It's a very good banking practice because it assures members of the public that banks will always have liquid assets to meet their demand for cash, including the cash at the ABMs, right? So what we have introduced is an amendment to say that not only should they hold 100% of their monthly projected outflows in high quality liquid assets, but they should have an additional buffer of 20%. And essentially that additional 20% would mean that they are proactively managing their liquidity needs in the future, because if it falls to 115, they'll begin to hear from us at the central bank. We will write to them. They will tell us what their plans are to bring it back up to 120. And if it falls to 110, then they will begin to hear from us in terms of required actions and possible remedial steps that they would have to take, and they would enter our ladder of enforcement. So this amendment is about strengthening the banking sector's ability to meet the obligations of their license as deposit takers. This is the major source of funding for the banks, but they also have an obligation to make sure that the portion that the public comes to them for at an instant, they're in a position to meet that need. And so that's the amendment. It's a fairly non-controversial one because it basically says it reinforces their obligation that they already have with their license, one. 2, it's consistent with them being in a regulated space, and it's consistent with, let us say, the intensity of their obligation to meet demands of the public for cash. And 3, it is an orderly way of ensuring that they continue to manage their business. The final thing I'll say is that banks already keep well in excess of 100% of their planned outflows in high-quality liquid assets. In fact, on average, banks hold 130, 140, some even go as high as 160. So the amendment should have no functional impact on their businesses because they are already in excess of the 120. I hope that answers the question, and if there is anything that wasn't clear, I will try to clarify.
Okay, so good morning, everyone. My name is Trisha Reed from the South St. Catherine Chamber of Commerce that represents Old Harbour Town. So my question is, for the towns that there is no bank, for example, there's no Scotiabank in Old Harbour, and we depend only on the machines, is there a priority to those machines being 95% operational? And I ask this question because that machine never works, and I am sorry for the citizens in Old Harbour. The sun is hot, the machine doesn't work, and it's really chaotic in Old Harbour where the BNS machine is concerned, especially for the elderly as well.
Sure. So, I mean, first of all, let me say that the standard of sound practice is applicable to all banks, and it's applicable to all locations where that bank decides to install a machine. The service level standards are applicable at a 95% level, which basically means that 5% of their stock of ABMs could be underperforming, and they will still be in conformity with that. However, what has happened is we do have a email address at customer.complaints@boj.org.jm, where we receive complaints from members of the public, and to the extent that they raise issues about particular ABMs, we can be in writing to the DTI concerning that particular ABM, which would not necessarily be an issue with their compliance with the service level standards, but it would be an obligation in just in terms of meeting their customer relations. Yes, customer.complaints@boj.org.jm. customer.complaints@boj.org.jm. And now that you have raised the issue about the situation at Harborview, I mean, Old Harbour, thank you, Old Harbour, good thing I repeated it, Old Harbour, we will certainly be in discussions with them about that particular one. Sure. Sure, so we'll definitely follow up on that. No, I'm not.
I understand the 95%, and it seems like an okay number, but an overall 95%, I don't think serve the overall citizens very well if we have an entire town that's at 30%, but they're still hitting the 95%. So I think that there needs to be some adjustment
Recording
somehow
stopped.
to ensure that we are covering all of the communities, because it's great to say, hey, I'm at 96%, but if there's a town that's at 20%, then we're not really serving that town very well.
Sure, and I think we have to see the service level standards as a progressive intervention. So we want first for our DTIs to begin to meet that standard. Of course, we're already seeing where there are a number of DTIs who are exceeding that standard as well, which is really what you want. You don't want everybody settling at the minimum standard. You want a sense of excellence to prevail in the marketplace, and that's certainly something that we can continue to work towards. But first, we want them to nail the 95% in terms of availability of their machines 90% of their machines being operational in the first place, and the recovery time, which the industry has trended towards that reduction in the time that it takes for the machine to be brought back into service, which we're pleased about.
Do we change the bank that we do business with, or maybe just, stop doing business with that bank? Because for us as business owners, it is hard for us to be traversing to Spanish Town, which everybody really hates to go into a volatile town to carry money. Maypen worse. What do we do?
Yeah, so I would say that some of these issues, which are very important issues, be great if you drop an email to that box, and it would allow us to tabulate and then to engage with the DTI concerning that. So to the extent that they're closing branches and there are no Dropbox services, then it does impede the business activity. So that point is well made, and we can continue to engage them in terms of how that business model can better accommodate the realities of the business sector.
Thank you, Dr. Lewis. We have one last question to one of these two gentlemen. Who drew the short stick?
I'll go
You?
for the question.
All right,
yeah.
go Al.
Or we can fit it into it. Governor, I need to ask you this question. Governor, we're seeing increasing cases of cyber fraud and skullduggery at financial institutions. Week after week we see it in the press, but yet the financial institutions say turn more to digital, turn more, and invariably the people perpetrating these things are working inside the financial institutions. Is that a concern of yours, and what can be done to address that situation? I'm going to give Durant.
Right, I have a rider to that, Governor. It has to do with the prevalence of bank fraud, in particular digital fraud. We heard from the Financial Investigation Division about a $100 million fraud which was perpetrated on the sector, and it has to do with a weakness in the sector whereby the bank actually allowed the fraudulent transaction to go to another bank which actually paid out the money. And this is a systemic problem, and I don't know what is the bank is doing, the BOJ doing about forcing the bank to ensure that there is protection for the unsuspecting customers.
Yeah, so, cybersecurity is vital in this day and age, and we have just been in discussions with the banks about standards of cybersecurity, and I'm going to ask Jide to address that for us.
Yes, thank you for that question. So we actually issued a standard last year, December, on cyber resilience. I think what is being accepted globally is that, being attacked by cyber criminals is not a matter of if, it's a matter of when. And it's a matter of the ability of your framework to recover quickly from such incidents. It's not a Jamaica issue, it's a global issue. We have issued a service level, a standard of sound practice. It's available to the public to read, and it obligations on ultimately the board of each DTI to ensure that their governance framework for managing such risk is robust. That standard was adopted at the end of March of this year, so it is now in force, which basically means that banks that don't bring themselves into compliance with all the obligations in that are subject to sanctions from the central bank, not least of which is the issue of not operating in a safe and sound manner. Because, of course, the criticality
Recording
of
in progress.
Ensuring that members of the public have confidence in the mechanisms that they have in place. But we're going beyond that. We've started to engage with the industry in relation to examinations where we go in and we evaluate the robustness of their framework. They have an obligation to ensure that it is robust. They have an obligation to ensure that their first, second, and third line of defense are robust. Their first line meaning the person that's engaging with the customer or the client, the second line meaning their risk management functions, and their third line being their audit functions. And so we will be evaluating each of those aspects of their own governance framework, including the decision making at the board level. There are also other initiatives that are taking place in this respect, some of which I can't really divulge, but there are coordinating mechanisms that are being put in place to allow the sector to be a lot more responsive to these eventualities and to be a lot more robust in terms of their ability to recover from these incidents. So it's a fact of life. We are doing what we can from the regulator's perspective to ensure that their frameworks are robust, they are clearer on what their obligations are, and we think that over time we'll begin to see the benefits of that. And by the way, this initiative is not just for the banking sector, it's for the entire financial sector, because the service level standards, or rather the standard of the sound practice, was issued both by the BOJ and simultaneously by the Financial Services Commission. So it covers all financial institutions. That's critical because, of course, fraudsters are, they go for wherever the weakest link is in the chain. And so we're making sure that we have a comprehensive approach. The final thing I'll say in respect of that particular fraud, I did not get this specific question because, so I want to make sure that I answer the question.
What Mr. Darren explained was that the POS system, when you trigger it, a transaction is recorded. They shut down the system so that the other bank, when they're trying to negotiate that transaction, doesn't get a reply, and there's some system which says that if you don't get a reply, you trigger a yes, and the bank paid out based on that system. Now, it boggles me with such a system that you have in place, such a protocol in place. How on God's earth could a $100 million fraud be perpetrated? And look at the fact, this is a 100 million, suppose it was 10, 15 such instance that would destabilize the banking sector.
Yeah, so I think we need to put everything into perspective. So the banks have an obligation once a fraud has occurred to immediately notify the supervisor concerning that particular incident. We have been receiving those reports and we publish those reports. They're in our annual financial stability report that shows the statistics on how frauds impact the system. The reality is that overall, the extent of fraudulent activity in the system is still a very, very small percentage of total assets and a small percentage of their capital base. They have provision set aside for these eventualities. So we're not alarmed at this point at the rate of fraudulent activity that's occurring. We want it to come down, but it's not something that is that is growing out of control. In fact, in our upcoming National Risk Assessment, we'll be giving, which will be a document that's publicly available, we'll be giving a sense of how those frauds have evolved. And what we are noticing is that, in fact, most fraud types are actually reducing both in frequency and in size. The debit cards have become the target of the fraudsters. And so we're engaging with the DTIs to ensure that they tighten up on the control measures for that. That particular fraud that you mentioned had to do with the ability of the owner of the POS system to engage in transactions offline. And so they found a weakness and a vulnerability in the system and they exploited it. So the bank now has removed that particular feature in their system. And so as the fraudsters evolve and find weaknesses, then the banking system has to respond, close that down, and so it will continue. What we're hoping is eventually banks will become proactive. And so there are things such as penetration tests where you can actually have a white knight come in, evaluate the weaknesses in your system, fix those proactively, and then when the fraudster appears, then those mechanisms would have already been tested and the patches put in place to prevent the exploitation. But it's a journey. So notice we just issued the standard in December, and it was approved after consultation in March. So we do need to give the sector some time to actually absorb and implement the requirements therein. Yeah, so I want to be clear about penalties and how penalties work. In a regulatory framework, you have what is called a ladder of enforcement. That particular ladder of enforcement means that the first thing that we do when we find a gap in a DTI's framework is not to go and say, give us your license, right? So we don't go to the ultimate of saying, you know, you're going to be delicensed, you can no longer participate in the space. The first thing is usually a warning, and then you give a set of remedial actions. We then evaluate whether those remedial actions were taken, and then we test again. The next is an escalation. Thereafter, if we see persistent deficiencies, thereafter, then we do sanctions, and some of those sanctions can be monetary sanctions. But I don't want the public to get the impression that we immediately go to sanctions as soon as we see a deficiency. If we did that, then what would happen is eventually banks would become so risk averse, they wouldn't even issue any new products, because they say, boy, if I issue a new product, something could go wrong. If it goes wrong, I'm going to get sanctioned, and so on. And over time, what it means that the wider society will not benefit from innovation. So we have to balance sanctioning with allowing entities to offer services in a controlled way and then make the changes as they go along. All right, thank you.
And I would just like to just quickly, on behalf of St. Anne Chamber of Commerce, I'm not asking a question, I promise you. I want to commend DOJ, and I love this as a media practitioner, but representing Dr. Davidson for St. Anne Chamber of Commerce, I'd like to invite us to go to the communities. Because he hogged the show, took 3 questions. Over here, you took 4. And the public hasn't asked 1. And I'd like to say, love the start of the press conference. Maybe go into the town halls. Governor, I love you dearly. Maybe go to the communities, the different parishes, so we can get their concerns and we can give them the answers. I did not ask Governor to respond. I was just leaving on a boot.
Thank you for that comment. And we have been to Montego Bay last year, and we were going, when? Where? November too? Mandeville. We're going to Mandeville in November. But yes, we like to go through the island with the press conferences. So is that it, Melanie?
Yes, it is it. This gentleman will ask you a question after the press conference, but this is...
No, you can go ahead if you
go ahead.
Thank you so very much. Chase Brown from the Manchester Chamber of Commerce. Really happy to be here. Thanks for the invitation. There's the projection that is made here for moderate growth in the near term of the economy. It's also based on my reading here on the fact that there are some industries that are not affected by the baseline tariffs in the US. Do you have a list of some of those industries for potential growth based on the fact that they won't be affected by those tariffs?
Well, bauxite is a crucial one. And so we're hoping we'll see revival and growth in that sector. And we expect construction to pick up also. And that's not, agriculture still have some recovery to go. So I think we're on, so long as we don't have bad weather, I think we're on pretty solid grounds to see a return to growth. And you know, we normally grow like 1.5% per annum, which is not great, but that's our normal growth. But we're coming off of bad year, so that 1.5 may go as high as 3%, right? Because the base is so low. So that's our expectation. Melanie, can I sit down?
You may be seated, sir. Thank you so much, everyone, for your questions and for joining us this morning. A special thanks to the economic sector stakeholders, including representatives of the Chambers of Commerce across Jamaica, the PSOJ, JMEA, GMA, and the other business associations. Do have a good day.
Thank you.
Come to smoke cannabis. Doctor say make a pop one of this. Make me fly like say I'm Aladdin. Come bring some kind melodies. Oh mama myself no do pass like this. So many things inside of my jeans. I slide down DBTs.